Ladies and gentlemen, Kei Kim here. Welcome to the Daily Update. Hope you guys had a good day. Trading today, market is up about 0.4% on the S&P. Nasdaq, it looks like Nasdaq led the market today with a 1% gain there. Semiconductor 0.3%. We got Dow, small caps, transport, red prints today, along with the banks and energy. Actually, they got hit today, 1.4% negative on the banks and 1.2% negative on the energy sector there. We got the biotech and the healthcare, home builders, utilities, retail, emerging market up a little bit. All of those guys today. Bitcoin's down a little bit. Gold, silver, miners down a little bit today. Dollar flat. We got oil and treasury bond up a little bit. VIX is slightly red there today. Let's stick with S&P. Spider. 65-minute chart here. So we've, last week we've been talking about giving the benefit of the doubt to the buyers. I think last Thursday was the last video, and this was when things were looking a little bit hectic here for a day or so. We saw like a 1% or so downturn. But at the time we talked about, hey, we're above the gap area. My short-term moving averages are rising. I want to continue to give benefit of the doubt to the buyers. Well, on Friday, we gapped up slightly here. That's that gap right here. And then with a very strong first hour move, second hour move, pretty much all day long, it was holding up its gains. This morning, we opened up another gap up, very similar size to this on Friday morning, very identical there almost. That's a Friday morning gap up, Monday morning, this morning's gap up, and then we saw first hour move, second hour, we held all of its gains, and a little bit of decline on the last hour, nothing crazy there. So we've been seeing 2 days of rally here and today and last Thursday. So overall, looking at this, obviously the market is cultivating higher highs and higher lows. In the short term, we want to continue to give benefit of the doubt to the buyers. At the same time, we'll know that we got the up gap open, this up gap here, that's the up gap there. As long as these up gaps stay open, it's gonna provide that buying pressure. Should there be any kind of shenanigans, should there be any kind of slide going into this week, obviously the first level of the gap area is going to be 450. That level is going to act as support, right? That the gaps are deployed by the bulls so that later on, if there's going to be a slide, that gap could provide some kind of a cushion, some sort of support there. And not to mention, we have both of my short-term moving averages residing at 448. Regarding that level, we got 445. And get to my secondary short-term moving average, not only you have to break, bears have to break below this gap. We got the first short-term moving average, and then we got this gap, and then you get to meet with the secondary short-term moving average. Let's zoom out here. You might be wondering what this line is all about, that pink dotted line. Well, that's a new rising pivot, right? So you can see right here, that's the rising pivot, right? The market just cultivated this because you can see it's been acting as resistance here, and we gapped up today and breaking above it and holding above it. So that pivot could be a crucial level, right? That's the level where we could see prior resistance acting as new support. And that's the level coinciding with this gap area at 451. So there will be like a micro-term support there at 450, 451 or so, the rising pivot and the gap area. Again, my short-term moving average is still residing in that vicinity. And again, you can see here, and we've been talking a lot about this gap like all week last week after this decline. And this is what I mean, right? That gap was deployed by the bulls, and then you can see there are these pullbacks that occur, and these gaps sustained, protected that cushion, acted as that cushion, protected that level, right? Dip buyers came in and they became the proverbial bottom, right? And then once we reclaim both of my short-term moving average, and at the time the game is over, at least in the short term of things, And you can see how quickly bulls brought it up, took advantage of that. And then at some point, what's going to happen is kind of retest that short term, because we had 3 full days of bullish rally. You'll think that they'll come down, and you'll think that buyers going to rest a little bit, retest that short term real quick, and then see that 2 days of rally. Again, that's Friday rally, and that's today's rally there. So the market is respecting the trend. Market has gone above that rising pivot, kind of a breakout mode here, because it's been somewhat lethargic. I mean, the overall market's been lethargic this entire, but keep in mind, market is up 20% year to date on the S&P. And when you see 20% gain on S&P 500, it's considered a good year. Anything more than 25% is considered a great year. Anything around 20% is considered a good year. So, we're entering into September trading months. So we got September, October. We got 4 more months to go. Currently at 20% gain year today, and that's a good gain. Currently, Spider trading at 450, or close the day today at 452.22. Let's check out the oscillator and see if we can extract any more information. So oscillator is, first of all, we have to understand the fact that you can see how bears are not able to bring the oscillator all the way to the bottom of its band. Do you see that? It's pretty unusual where it's going to stay like this for the entire month. So you can see that tells us that there's still a buying pressure. Their buyers are still in control. Despite the fact that we've seen these corrections in the month of August, what the oscillator is telling us, bears are weak. They're not able to bring it all the way down. And with that, we are seeing these premature bounces on the oscillator, not able to bring it all the way down, telling us that buyers are much, much stronger. And that this oscillator is telling us maybe in August was almost like a consolidational type of movement, kind of a resting period, looking at things more of a midterm before maybe a rally that may or may not come in September. So I think obviously we want to continue to give benefit of the doubt to the buyers, but when we do a signal like this where the oscillator does not come back and not even able to touch the bottom of its band, which is an oversold level, because we never got into oversold level the entire month of August and almost the last week of July. And that's a long time to never hit oversold level. And so at this point, we can see that bears are really losing its traction, losing its momentum, and they're not able to control anything. It's really been buyer's market, especially this summer, and especially in the month of August, but throughout July also. And so, this is the best market for the long-term investors and the long-term traders and position traders. It's very, very difficult market for short-term traders who benefit from these swings and stuff, because the market has been so lethargic. Especially if you're playing short-term options, this market will be detrimental to your short-term options held. So and some of the things that you guys know that I'm more of a long-term investor. I hold things much, much longer term. And it's been very easy summer just because I didn't have to, react and every time there's short-term fluctuation, because if you're looking at things more long-term, you're not going to choke your positions to death. You're going to kind of allow the market to move up and down. You're going to allow your positions kind of wiggle around a little bit. But if you're too uptight, if you're too intimate with your positions, well, this year has been really, really difficult just because the market has been it just didn't see a lot of attraction to the upside. Can we see that kind of traction going into September? Maybe so. This entire year's been kind of a lethargic market ever since we saw that kind of a big push on that election week. That was the last time we saw that almost like a strong bullish run for a week or two. Ever since then, it's been, the story has been, we make some move, lethargic, makes a move, come back down, go up, come back down. So I think we want to keep in mind that we may continue to see this type of market. And keep in mind, S&P 500, other indices indices, other sectors did see its corrections like 10%, 12% or so. S&P 500 itself has not seen a real correction this entire year. And only last time, 2 times in the history of stock market that had happened was 1995 and 2017. 2020 maybe go down that path, go down in history as that year that S&P did not see a real correction. When I say real correction, anything from 8% to higher. So we haven't seen anything like that this year on the S&P. Nasdaq did see about 12% correction earlier this year, like semiconductor 8-10%, Russell 2000, transfer also. I don't think Dow saw that real correction. Other sectors, energy sector, bank stocks, biotech, some of the other sectors did see that. S&P didn't. So it's been kind of a mixed market this year, but I think that's healthy because we came off of very, very fast V-shaped rally after COVID. So I think what happened was this year, market was correcting in a different timing with different sectors and different indices. And S&P being that golden index, because S&P is always kind of right in the middle, right? It never overshoots. Nasdaq semi, they tend to overshoot. And then like Russell 2000 and the banks, they tend to kind of, stay behind a little bit. S&P is usually sandwiched right between. So S&P being that kind of a golden index, I'm not surprised to see that it's the S&P's only index pretty much has not seen a real correction and has seen that steady gain the entire year. So let's see what happens tomorrow. I come back to you. Enjoy your evening.